Buying a manufactured home and not sure if FHA will finance it? Here's the quick guideline checklist. Number 1, HUD-code home. Number 2, built on or after June 15, 1976. Number 3, primary residence only. And number 4, the foundation has to check out. If any of these fail, your loan can fall apart and fast. Let me show you how to avoid that. I'm John Thomas with Prime Residential Mortgage. My team and I help home buyers and homeowners navigate FHA manufactured home loans for purchase and refinance without the guesswork. FHA can finance HUD-code manufactured homes that meet federal and local standards. They can be single-wide, double-wide, or multi-wide. Homes must be built, as I said, after or on June 15, 1976, and can be used only as your primary residence, not a vacation home, not an investment property. Now, the manufactured home itself is where most deals struggle because, frankly, most lenders and loan officers don't understand the unique differences between purchasing a stick-built home with an FHA loan and purchasing a manufactured home with an FHA loan. The following are common issues that come up that are easily missed. Number 1, the home needs a permanent FHA-acceptable foundation with the transport gear removed. There must be a HUD data plate and a HUD tag on the property. It's got to be titled as real property with the land you own. If it's on leased land, then you will need a chattel loan instead. The property will also need to meet FHA's minimum property standards as determined by an FHA appraiser. The property can have additions built onto the manufactured home, but all additions must have permits and meet FHA standards in order for the home to be financeable. Now, the borrower qualifications are typically your standard FHA requirements. You have to document your income. Your debt to income ratios cannot exceed the maximum of 47.57. You've got to have a qualifying credit score of at least 500. Now, many buyers can actually do as little as 3.5% down if they meet the FHA minimum credit score of 580 or higher. Now, FHA does require mortgage insurance that is included in your monthly payment. Now, here's how the purchase process typically goes. Number 1 is you got to find a good loan officer that specializes in manufactured home like me and my team, and we'll get you pre-approved for an FHA manufactured home loan. We'll confirm your budget and the program fits your needs. We'll also look into confirming if you're eligible for any down payment assistance programs or any first-time homebuyer programs. We'll verify the property meets HUD guidelines, has the HUD's tags, the HUD data plate, and the foundation. Basically, FHA is going to require you to get a foundation certification. So we'll help you get that done. We'll also have to get an FHA appraisal, and we'll have to confirm the title. So the FHA appraisal will confirm the value and that it meets the minimum property standards, and the title has to be what's called retired at the Department of Motor Vehicle, which means it's now become real property. If the title has not been retired yet and it meets all the other guidelines, then we can work with your seller to get them to retire the title at the Department of Motor Vehicle so that you'll be able to close on the home. Now, once everything's rectified, you'll go to closing and you'll sign all the paperwork and you'll leave with the keys to your new home. Now, what if you already own a manufactured home? Well, then you can look into an FHA refinance to get better terms or even cash out. So if you actually already have an FHA loan, you can take advantage of an FHA streamlined refinance. It's less documentation, no appraisal, no income verification, fast closings. Now, the downside is you can't get any cash out. So if you have already have a loan that has a higher interest rate, then maybe an FHA rate and term refinance can be used to lower your rate and your payment. But what if you need cash out? Then an FHA manufactured home cash out loan will help you. You can get up to 80% of the value on an FHA cash out. Now, common deal killers when you're dealing with manufactured homes and FHA loans. The biggest one that we come across is the property's missing the HUD tags or has no data plate. Now, most people are dead in the water right there, but we can actually research that for you. And if it ever had the HUD tags or a data plate, we can find those for you, get copies, and still be able to close the loan. The second big deal killer is it's not on a permanent foundation. That one's tough to avoid unless the seller's able to put it on a permanent foundation prior to closing. And then another big one is the property's on leased land. You don't actually own it. There's no way to get the loan. Then we'd have to switch it to a chattel loan. And then the last one that can be sometimes challenging, the appraiser can't find comparable home sales of manufactured homes in the area, so it can get tough to establish value. Now, my team vets all this stuff early so you don't waste time and money or miss contract deadlines. So if you want a straight answer fast, give me a call, 302-703-0727, or you can apply online at my website, PRMILoanApplication.com. We'll confirm your eligibility, run your payment options, and give you a clear plan from pre-approval to closing. So book your free consultation below and find out how much you could save. I'm John Thomas. If this video helped you, please like, subscribe, and drop any questions below in the comments, and I'll be sure to answer them for you.